Thank you for tuning in. Peter, Rob, good afternoon. Mo, good evening. Thank you all for tuning in. If you're tuning in now or after the live, please make sure to hit that like button so that we can push this content not only through the algorithm, but to help with the analytics and to help more people find this community that want to, have an active discussion. I'll show you a few reasons why the market was it was a retest day, as we talked about yesterday. Nothing has changed in terms of the market. All we've really seen is risk assets. We've got metals under a little pressure, but look at even gold, barely down $8. 0.4%. Even with this shuffle we've had today. Messi, welcome in. XRP, baby, indeed. So DXY will start here. The DXY is having a common retest, even if it's a Bart Simpson top. We talked yesterday how we needed to retest the 105.71, and now look at this. Look at this. David says, perfect timing, Tom, driving home from work. Excellent, David. I'm so glad you're out of work. Please have a safe drive. Go Buckeyes at Tom, even though I'm from Michigan. You're from Michigan, and you like the Buckeyes. Well, I won't go there, but, to each their own. I don't hate on you for it. I don't even hate on the Buckeyes as a whole. Most Michigan fans hated them because they made us their bitch for mainly the 2000s. In the 90s, it was the opposite, so I never really feared Ohio State until 2000 and on, 2002 roughly. No, I take that back, 2004. But now it's the opposite way, so, it's all good rivalry. Forex, I appreciate you, really, I do. Terry, welcome in from Mexico. Hola. David, good afternoon. Thank you for tuning in. Mr. Kennedy, welcome, and please be safe is what I was getting at on your drive home. So with the DXY, we have a death cross in the 4-hourly. We were coming up to see if we were still bearish or if we could invalidate this movement. We needed to first get over 105.71 and ultimately get over that 105.93. MGR says holding gold, waiting for oil to crack down more. Auto repos going up like crazy. They sure are. That's an excellent point, MGR. They sure are. The auto repos in the USA are up exponentially here in the latter half of 2023. Sully, good mid-afternoon. Welcome in. I thank everybody for tuning into the Midday Market Report. I really do appreciate everybody who tunes in to watch this side of the market. We cover crypto and XRP all day. But this is the one time when I step outside of crypto with the Midday Market Report. We can go through everything that's happening. So this is what we're really looking for. Are we going to reverse back down? This could be the start of what could, if it pulls down just a little bit farther past 105.46 approximately and starts pulling down, that could start the beginning of a long leg doji. And as we know, those are bearish. So let's see if we can push past that 105.40 area on the way down. And right now, this is still looking like a gravestone doji is trying to form here. This is the opposite of a dragonfly. So even though it attempted to come up, it never made a new high, and now it's got some downward pressure here, even though it squeezed a little bit in the middle. That's why I'd like to see it pull down a little more, improve a long leg doji, and, show us that we're probably coming down here to retest that 104.72 again. But if you look at it in the daily, could this be a reversal candle from the breaking down? It looks to me to be more of a retest candle. We don't really have a big breakthrough. So that's what I'm looking at. Forex, 65 or 64 cents before a bounce on XRP. Well, even though I don't really go into XRP a lot on the Midday Market Report, I will show it when I get a question or when I feel like it's necessary, and today it's necessary. So XRP, real quickly, if we're looking for the new support levels, I talked about it yesterday. I talked about it in the morning update this morning. It's that 663. That 663 on the weekly time frame is where you would want to hold. And even if it came down to 663 like it did or a little bit below, it's actually about 663. That would be a nice inverted hammer candle. And like I asked in the short today, is this a XRP breakdown or a liquidity grab? This looks to me like a liquidity grab right now. Just like we did after we hit 58 and came back down to 53. I mean, it's the same logic here. We're doing the same thing. We went up to 63.3, went up, came back and retest. Now, the question is, are we going to have our first official retest after a push up of significance? Are we going to have to come all the way back down to the pattern structure breakout of the rising channel? I don't want to go there. In the daily, you can see we're starting to show, even though we have some bottom side pressure, it pulled right up off of there. And right now, that to me and I know I might get an argument from some, that looks like it's turning into an inverted hammer here. I'm not necessarily seeing a sign of huge weakness yet. In the weekly, like I said, this inverted hammer would look even better if it squeezed down a little bit farther. But if it were to push out here to end the week, you wouldn't even remember this drop. Because if it came back above 732, that would just invalidate that entire move. And it's still within the weekly candle. You'll pick it up in the daily time frames. But right now, if we look at volume, we had 194 million a couple weeks ago. Now we had 232, and now we've got 172 already, and it's only Tuesday. So the question was, is it going to 63 or 65? I would say if it doesn't, okay, you got two levels that if you want to keep this pattern bullish, you hold. Ideally, we would hold 663, have a nice inverted hammer. It did come down here and retest this area. If we need to overextend, I would not see anything wrong with it coming down to 636 roughly. That would be the retest of the rising channel right now. And it hasn't necessarily done that yet in a weekly format. So would I be surprised if it does that? No. But technically, I don't want it to come below 663 on a daily close. And I want us to work our way back over not just 71, but now we're going to have a daily close over 7327 to validate the move up to around 85 cents. Right now, we're squeezed. Same thing that happened between 55 and 57. Nothing more, nothing less. And within the dailies, it signifies it. There's not an overtly sense of weakness here. Even when it came down, it automatically pulled right back up. The one thing I talked about yesterday was we knew it was coming to retest because we had a long leg doji formed in the 4-hourly, which all of a sudden came straight down. So it didn't even form a long leg. It ended up forming what looks like a bearish hammer candle. But now it's consolidated. Now it's that 663, or are we coming back down to the 6? Actually, it's 633 where I like it. It's either 663 or 633. That's where you really have to look to see if XRP's pattern's holding. Otherwise, if we've already held on 663, now it's our job the rest of the week to work back and get back above 71 cents. And then ultimately try to break that 732 pattern formation high so far on this move up. The Dow Jones is down 56 points, very uncertain, 0.17%. The Dow still looks to me like it's put in a W reversal. We have a bullish cross here now in the 4-hourly. We're still on top of 33,906, and we know as long as we stay above that level, we should be able to come run back up to the top of the broadening wedge. And if that's what they're trying to do, they're going to be putting in about a 2,000 point run here, a little bit over that. So if this W reversal plays out, it came beautifully down to 32,580. We know it's in a broadening wedge. We've already hit support and resistance twice. Now the only question is are we going to go up and break out, retouch this, or are we going to roll over here? It doesn't necessarily speak to me like we're about to roll over here in the daily candles. There's no bottom side weakness. Even on weekdays here to start the week with the dollar, the Dow's not giving it back, which is because the U.S. government, after yesterday, they let it sell, or they let it run back up. But now again, like I said, for the last several days, the U.S. government is buying these bonds. They're the last resort. They're the buyers of last resort. And guess what? They bought and they continue to buy. I would not be surprised if we shatter this 4.27%, even that I was talking about, and come back down here towards 4%. I would not be surprised in the least. I also wouldn't be surprised if we have an overzealous sell-off attempt by the government and you bring yourself back to 3%. Is it a long shot? It sure as hell is, and I don't expect it. But would I be surprised? No. What is the reality here? Probably what we talked about before. Probably a retest of this newly formed uptrend is probably where they would trap or find some more buyers. So people would probably be 3.8. That's why we keep pointing to that 3.8, 3.9% area. That's just that newfound test area if it comes back down. But 4.3% is where I would expect them to sell it down to at least. We'll see if it plays all the way through. It's starting to. This is looking very bearish. Dot cross, rejection. I mean, the next step is coming down to what we're talking about. So let's just keep an overtly open eye on this kind of stuff. 55 people in here. I'm actually surprised. I didn't think there'd be that many people in here with the bearish formation, or at least the bearish overtone today. Only 25 likes, though. That's under 50%. I know I deserve better than that. If you don't want to hit that like button, or you just don't feel like it means anything, you can always send a YouTube super chat or join Tom's Army if you really don't want to hit the like button. That like button allows me to reach more people. I don't do any paid promotions, advertisements, or sponsorships of any kind for your free viewing experience because I don't want you to have to pay for the information. So I really do expect, desire, and would appreciate, because I've earned that like. Crude oil, exactly what we talked about, 4.28% or down $3.45 a barrel. What have we talked about? Because of what the U.S. government said, they wanted it down at $77 a barrel. So what did we say? We put a sign down at $69.97, and the only other way it can hold is at $77 a barrel. Otherwise, we're coming straight through. So you see what happens when the government's on their way and when the government does what they want to. The gold-silver ratio is up $1.20, up 1.4%, simply because silver fell faster than gold. But I believe these are optics, as the U.S. dollar will be bid back down in the near term. RC Kruger, good evening. And yes, like Trading with J. Rice said, hit that like button, please. We've got the gold-silver ratio bouncing off the 200-day, and now we're going to meet up here at 88.29. If it breaks through here, we should be able to come up to 91.9 to 1. But this would just mean, that doesn't mean gold and silver is going to break down. That just means silver is going to outpace gold. If it, on the drop, if it's on the upward swing, it just means that silver is going to be a little bit behind gold. And that could just mean, like right now, gold's down 0.4%, but silver's down 1.7%, so it switches it up a little bit. We've got silver on the rotation right now. We talked yesterday, we're going to do a rotational pull. I know some people are like, what's the rotation? Well, this is the rotation. Now we need to see if we can hold this, bring back up like we've done so far, and we need to at least hold $22.30. Otherwise, we could break back through and pull down towards 20, but where the market's at, this little inverted head and shoulders, make no mistake about it, silver in the daily is in a inverted head and shoulders, which is a bullish formation. You got the head here, right shoulder forming. If this pulls up, expect it in there. I mean, that's an inverted head and shoulders. It's a nice setup. So I think these are big optics here. Big optics. B2 gold down 3% or 21 cents. Same thing. Got the inverted left shoulder, came down to a head. Now it's putting in the inverted right shoulder. I mean, this looks like it's converging for a big move up to $4. It really does. If it breaks through and we get rejected, well, we reserve the right and it can come down. But as of right now in this setup, as long as the DXY does what it looks like it's going to do and end up fading here, this is going to have a nice pump here in metal. That's just my interpretation. And then last but not least, Solana. Well, that's... I don't do a bunch of crypto during the midday market report. Solana, if you want me to look at Solana, you probably have to come back tonight at 7:15 p.m. Eastern, or 6:30 p.m. Eastern Standard Time when I go through all of crypto. This is something different I do here. This is more a midday market report, so we can stay on the right page. As I've said with Bitcoin, as long as we don't break 34,000 or the 34,000 level here, we're on top of a broadening wedge, and the technical target is 37,863. So remember that. And just because you asked, I'll at least pull up Solana. I don't even know where my chart's at because they took it down. But other than that, I'm just going to read off the what's going on in the market, and then I'm out. So, Solana's got a nice reversal here as well. 4 hourly's got a nice inverted hammer candle. That looks pretty nice. That looks very nice, actually. Solana looks really nice. Daily candle, not as nice. The 4 hourly, though, if that hammer candle plays out. So basically what you're looking at here, again, we're looking at some jank forms of inverted head and shoulders across the formations. You had a nice drop down form, what looks like a left shoulder, into a head formation, maybe a right shoulder here. Now this bounce up, as long as you get a hold at 36 approximately, you should expect this to counter punch up to here about 50. Wow. Wow. If you get this successful reversal here, you should be coming up to about $58 here. Where are we at right now? You could have a $14 swing here on Solana, so just watch where I aforementioned. And now real quickly here, because I got things to do here, and then I want to be fresh still with my voice for tonight when I come back on for the crypto. You know, I've already been on for a morning update. I did a short. Now we do the midday market report, and then I'll do another live tonight for crypto. So please make sure to hit that like button and tune in tonight so you can continue watching the content. And if you're new, hit that subscribe button. Miss Vicky, welcome in, and thank you so much for the compliment. I try, love. So stock market news today. Stocks edge higher as investors cling to Fed rate excitement. Stocks on Wall Street reclaimed positive territory Tuesday after the year's best rally as investors were lifted by renewed confidence in the Federal Reserve ending its rate hiking campaign this year. The tech-heavy sector, the tech-heavy NASDAQ composite ticked up about 0.8%, continuing on a win streak path, while the benchmark S&P 500 edged up by 0.2%. The Dow Jones Industrial Average increased by 0.1%, or roughly 50 points. Sign of a weak U.S. economy suggests to the market that the Fed could ease up on its tightening campaign, but investors were reassessing those hopes after Minneapolis Fed President Neil Kashkari said on Monday the central bank likely has more work ahead of its to control inflation. There was quite a bit of euphoria at the end of last week on the belief that the Fed is done, the jobs market is slowing, that the U.S. economy is going to experience a soft landing. No such thing as a soft landing when you're in times of high inflation, and not just that. This so-called soft landing puts us into hyperinflation times 2. So, sure, soft landing shows they don't know a damn thing. Michael Hawson, chief market analyst at CMC Market UK, told Reuters, people have started to become a bit more clear-eyed. There is the risk that the Fed could rise again. Investors will listen out for hints to policymakers, thinking when the heads of the Kansas City and Dallas Fed speaks on Tuesday, and when Chair Jerome Powell steps up later this week. And we'll cover Jerome Powell, believe me. And then just real quick, I'm not going to go through the individual companies, but I want to read this at least. The fresh Fed doubts clouded the outlook for oil, helping push WTI crude prices below $80 a barrel for the first time in over 2 months. That's all bullshit. Remember, we talked about this when it was up at almost $100 a barrel. The Fed came out and said their goal was to target at $77 by the end of 2023. And once they actually targeted as low as 70. They said that's what they wanted by year's end. So I said, when the government's saying that, they've got their ways to do it. They're going to manipulate it, and it's going to be far worse in 23. So expect $130 in 24 at some point. Saudi and Russian supply cuts, below $80 a barrel for the first time in over 2 months, despite the prospect of Saudi and Russian supply cuts. West Texas Intermediate crude futures and Brent crude futures both sank about 2.7% to $78.68 and $82.94 respectively a barrel. Also dragging on oil was trade data showing China's drop in exports unexpectedly accelerated in October. Who could have guessed they were going to stop exporting? Who could have guessed in high times of inflation they're going to keep their products home? And when they're about to switch their world reserve currency, who would have thought that they wouldn't have as much exports? We're the biggest. I mean, obviously it's not going to reach here. Now prices are going to go up. There's no coincidence here. So in October, it's kind of flagging overseas demand while its imports rose. But there was a bright spot for the world's second biggest economy as the IMF upgraded its GDP growth forecast for the country this year and next. You know why they did that, ladies and gentlemen? You better believe what's best for the GDP outlook is the prospect and advancement of war. So sure, it's getting better only because me and you are dying. Less people to worry about. Bunch of money. You know what? I better stop before I hit touch a touchy subject here. So in corporate news, WeWork on Monday filed for bankruptcy after the once most valuable U.S. startup grappled with expensive leases. Its shares have fallen about 98% this year. And then credit card debt and missed payments surged. New York Fed study finds credit card balance rose by $48 billion in the third quarter. Who could have guessed this? We don't have enough money. Of course, the people are going to max their credit cards out. What happens when they're maxed? Then we see the real hyperinflation kick in. When everybody's losing their possessions, houses, car, everything. According to data released Thursday by the Federal Reserve Bank of New York, the $154 billion year-over-year gain in debt was the largest such increase since the beginning of series in 1999. Yes, we have such a strong economy, right, Fed? Right, Jerome? At the same time, the 90-day delinquency rate measured for credit card holders increased to 5.78%, up from 3.69%. That means somebody not paying for 90 consecutive days. So it's all strong, right, Bostic? Bullshish kebabs. Thank you, everybody, for tuning in. I greatly appreciate each and every one of you. We will end it here before I get in trouble. Have a blessed afternoon, and if you want to tune in for crypto, tune in tonight at 6:30 p.m. Eastern Standard Time as we lead into the daily close. Don't be tricked by the market today. Make sure you hit that like button. Consider subscribing to my channel if you're new, as we've been on a nice little run here. I like seeing new people in here, but I also like to see the old folks here. And I don't mean by age, but the ones who have been here for a while to help push us through. Thank you, everybody, and have a blessed afternoon. You really do.